Good morning, everybody. Happy Thursday. It's June 15th, 2023. Great to be with all of you today. My name is Bob Lang, and I run explosiveoptions.net and an amazing, wonderful, credible chat room. It's right here. As you can see, 244 of the most amazing people in the world show up every single day and share information, trade ideas, learning stuff. I try to teach things during the day, shoot some videos as well too. If you're not in the chat room, come on in. This is the place to be. If you want to learn about options, you want to learn about trading, you want to learn about risk management in markets and so forth. So that's a plug for that. So let's see what's happening this morning. So we're off a little bit this morning, a little bit soft. Futures are down about 16 handles on the ES. Nasdaq down about 92. Dow missing about 50 points here. Of course, the Dow Industrials were hit the hardest yesterday, thanks to a big drop in United Healthcare, which is the largest component of the Dow Industrial. So it has the biggest impact on the Dow. We were a lot we're a lot worse right after the retail sales numbers were released. I think we've gained about 8 handles off of that. We were down about 23. Now it looks like we're down about 15 and a half. So you know, you got to expect some money being taken off the table now, right? And if you're not, if you don't expect that to happen, you know, you're really not doing it right. And you know, markets go up, the markets go down. And I think when we get jaded by companies like Tesla, who go up 13 straight days in a row unimpeded, and then all of a sudden they're down, and it's like, why? Why is it going down? I don't understand it. It's supposed to go up every single day for the rest of my life. I think that those expectations are far out, are wacky, and you know, if you think that's going to happen for you, and that you can't lose money in this market, well, I've got news for you. It'll happen, and so you just got to be careful, manage your risk properly, as we talk about that a lot during the trading day in the chat room and elsewhere. So let's talk about things here for a bit. So as we did see the S&P 500 rise a little bit yesterday. We saw the Fed had convened their meeting yesterday, a 2-day meeting, and they decided to pause on interest rate hikes. That was basically in line with what the market was expecting. We did have a milder producer price index number yesterday for May. We also saw a slightly milder to inline CPI number came out on Tuesday. And I think that those two numbers there collectively probably helped the Fed decide to take a pause. Believe me, if they were hot numbers, two hot numbers coming in hot, they would have easily raised interest rates yesterday. But as I did make a note in the chat room and also online yesterday. Now you got to really pay attention to what's happening with the projections. Now the projections yesterday, economic projections, which came out first time since March, were changed quite a bit, and the Fed is now forecasting 2 more rate hikes in 2023. Now, of course, there's 4 meetings left. We have July, September, November, and December left. So they would have to get that done before those 2 meetings are over to meet their objective. Now, these are just goals. These are just targets. They don't necessarily have to be there, because why is that? It's because, well, things are going to change. They're dynamic. They change from an expectation of 5.1 for the end of the year to 5.6, right? This is a dynamic number, and this is why market volatility can rise, because the expectation of the unknown is out there into the future. The Fed doesn't know what they're going to do. They're just following the data, following the points, and which is exactly what we should be doing. We shouldn't be trying to predict what the Fed is going to do, which, by the way, where are all my friends out there who on Twitter kept telling me that the Fed is going to cut this year? They kept telling us, no, we don't understand why people are expecting a rate cut. In fact, we're going to be hiking rates higher than many people had expected. I think some people actually have their expectations up to 6%, and that would be another 4 rate hikes in 2023. So that would be a rate hike, basically a rate hike at every meeting. So all those people who are expecting a rate cut, you know, you can just calm down now. Those rate cuts are probably not going to be coming until 2024. I see on the term structure, the earliest you'd probably get a rate cut would be March or April of 2024. And I think that maybe if we're lucky, if you're looking for rate cuts, 2 rate cuts in 2024, that's it. Maybe 4 in 2025. So they're going to take their time, take their sweet time, loosening up on Fed policy with a looser monetary policy condition. Why is that? Because the economy is rather strong right now. 2% growth is the expected rate of for the second quarter, off of 1.1 in the first quarter, which is subpar, of course. But they didn't need to cut interest rates to get the economy moving. Why is the economy so strong? Well, it's jobs. Jobs are real strong. They've been strong for the past few months. That's going to slow down eventually, but I think the pace of hiring, certainly the last couple months, we saw a big jobs number just 2 weeks ago. The pace of job growth is extraordinary, and I think it's bothersome to the Fed, but it's also quite impressive to them at the same time. We saw wages dropping slightly on that wage when that unemployment report came out 2 weeks ago. So good news on that front, but it's the jobs market that's really carrying this economy right now. We did see in retail sales come out. I call it retail snails. Slow growth in retail sales, and we saw the Philly Fed number came out. That was disappointing. Slightly, maybe it's a little bit slightly better than expected, but worse than the prior month, worse than May. Retail sales came in at 1.6. The number that I really pay attention to here is the ex-auto and gas. That came in at plus 0.4. So that was actually pretty strong. The expectation there was minus 0.3. So it looks like that we had some really good sales in restaurants and retail outlets, and along with online sales as well. So I think we just certainly have to watch what's going on in the next couple of months. I know schools are getting out right now, but back to school, isn't that funny? Where schools are getting out now, we're going to see back to school sales starting up after 4th of July. And don't forget, we have the Amazon Prime Days coming up. I think it's a two-day window for Amazon Prime members in July. So we're going to see that coming up next month as well. So I'm sure people are saving their money up. Of course, we have holidays coming up as well too. We have Monday. The markets are closed for Juneteenth holiday. That's the 19th, and then we'll have another holiday coming up in a couple of weeks after that. Of course, 4th of July is the holiday, and the 3rd is going to be a half trading day on that Monday. So we have that. We all have that to look forward to. But as far as the data is concerned, listen, the Fed is paying attention to the data, and that's really all they're doing. And that's really what the message that was being sent from Chair Powell yesterday, right? It's nothing more. He's not being deceitful here. He's not trying to be tricky. He's just telling you what they're looking at, and they'll make changes, and they want to have maximum flexibility in case things change, right? And as I said, if the hot numbers had come in on the CPI and the PPI earlier this week, they would have been very flexible and said, hey, look, we can raise interest rate because there is the expectation there, a small expectation there, but we have to do whatever we can to try and bring inflation down. So let's take a look at the charts for a little bit here. New highs, new lows have been trying to push up really high. We've been doing pretty well with the new highs versus new lows. You can see they've been clustering above zero here for the better part of June, and that's a positive. This puts this indicator on a bullish signal. We've also had the S&P 500, which had a big outside day yesterday. It had a ginormous doji. So we need to see what happens. What's important? Yesterday's low. Yesterday's low is the important level here. So if we break yesterday's low on the S&P 500, 43.37 on the lows, we can make them run back down to this 20-day moving average, which is about 100 handles lower, 2.5% lower from here. Would freak people out, but in all seriousness, it's just a correction within a modest bull trend over here. Okay, so let's take a look at a chart that I did yesterday, which is called Match Group. This is the stock that I put out as the chart of the week. You can see that on I actually put the chart of the week out on Twitter, so you can see it out there. It's on my YouTube channel. So this is a stock that we've been on for the past month or so, and it built a really nice base over here, and it vaulted up in June, and it's making its way up here. I think it's got some room up to the low 50s here. It's about $43, $44 right now. And then let's see, what else am I looking at here? You know, Microsoft had a really good day yesterday. We added some calls on that one, and it's all over the map recently. So it had a nice move up towards 340. It has some resistance up there at 340. If it can get through that 340 level, I think it's got some room to get up to 355, 360. I'm not sure if it's going to get there before earnings. Earnings are, of course, going to be coming out in about 5 weeks, so towards the end of July. And then the last one that we've been doing really well with here is Netflix, of course. It's just been on a tear. We've been doing great with this stock. We've been, you know, buying calls, rolling them up, buying more calls, selling them and rolling them up as well too. So this stock is extremely overbought. When do you buy puts or short the stock? When it breaks down below this relative strength and below 70, and then it gets 2 closes below there. And you might say to yourself, well, that's going to be too late. The stock's already fallen. No, it's not too late. You have to wait for that signal to buy it. And the signal is the most important thing. And the signal the buy signal on those puts is when the stock breaks. Okay. And then lastly, of course, I'd be remiss if I didn't talk about Tesla here. Of course, it's going to open up a little bit down this today. Stock's been on a monster run here since the beginning of May here, right? 160 all the way up to 260, almost 255. And we've been, again, this is another stock that we've been playing for the past month or so since it broke out 202. I did note that on Twitter. I noted that in the room. I said if it breaks out above 202, which was right around the 200-day moving average at the time, it was going to, and it followed through. It was going to have a good run, and we've been riding on this horse for about a month. I still have a few call spreads on for tomorrow. I'll be out of this name for good for a little while here. I'll let the stock maybe take a rest after this ginormous run. So I think that's going to be it, everyone. We're going to have again a 3-day weekend. I won't be back on Monday. We'll see you back all on next Thursday, which is the 22nd of June. And I wish you guys all a very, very nice long weekend. Relax a little bit and enjoy the 3 days off. I certainly will, and I hope get a chance to see you guys all on Thursday. Oh, and don't forget, Spread Trader trial is still going on. We're gonna have another couple more weeks left on that Spread Trader trial, so look for that. I've also put that out there. Go to the website. Go to explosiveoptions.net. In fact, I'll show it to you right now, and you can see where the sign up is. If you just go to Explosive Options, you'll see the pop-up will come up for you, and the pop-up will hopefully come up for you. And anyway, just go to Spread Trader trial, actually, and there it is. And you can see you can try the Spread Trader for free for a whole month. All right, and Sam's been on fire here the last week and a half, 2 weeks. Everybody who's been in the service as a free subscriber here has seen winning trades for the past couple of weeks, and he's been on a roll for the past couple months. Don't get me wrong, but I mean, these last couple of weeks have been fantastic. Sam and I are going to do a special webinar probably within the next week and a half to answer all of your questions about Spread Trader and anything that that's come to mind that you've wondered about, anything that Sam's talked about, anything that's anybody else has talked about you have a question on. We'll be doing that. So thanks everyone for spending a little bit of time with me this morning. And Daily Bites, have a great trading day. Don't forget, keep that protection on. It's always going to help you. It always helps me buy more calls if I want to buy more calls if I have some puts on at the same time simultaneously. All right. Have a great day, everyone, and I'll see you guys all next Thursday. Enjoy the week.